Hello, and welcome to Explain the Charts. Today, we're analyzing Intel, ticker symbol Intel, combining news analysis with a detailed look at its chart patterns. Based on recent Google searches, Intel is rated a hold by many analysts, including Citi and Bank of America Securities, who have a forecasted downside of nearly 4%. Yesterday, the stock closed at $22.56, up 1.71%, with a 52-week range between $17.67 and $37.16, and a market cap of $98.41 billion. Intel's foundry unit made $4.7 billion in sales last quarter and aims to break even by 2027. Intel also faces a lawsuit regarding Mobileye Global shares. Let's shift to the charts and see how these events correlate. Looking at the daily chart, we can see some pretty significant volatility over the past year, culminating in a recent price of $22.56. There's a clear downtrend from January 2024 all the way until around August, and then it's been struggling to recover at all. Now, let's narrow our focus to understand recent price action. Focusing on the more recent price action, starting from February 10th of 2025, the price shot up from the 19th to the mid-27s. Since then, it's been on a rapid downtrend, bottoming out just under 20, and now it's on a slow uptrend to around 22.50 as of yesterday. Based on the daily chart data, a crucial support level to watch is around $19, which has been tested multiple times. A break below this level could signal further downside. Resistance sits around $24 to $25, where previous rallies have stalled. The recent analyst ratings may be contributing to the stock's inability to break through the resistance. The reports of layoffs and cost-cutting from Intel may be correlated to the stock's inability to surpass the resistance. For a bullish outlook, we'd need to see a sustained break above $25, supported by positive news regarding their foundry business or CPU sales recovery, which might be possible with the new lineup of TSMC chips, as reported by Forbes. Conversely, a bearish scenario would unfold if the stock breaks below $19, potentially driven by continued negative analyst sentiment or further legal challenges, such as the Mobileye lawsuit. Now, let's move to the hourly chart for a shorter-term perspective. This can provide more granular detail on current price movements and potential entry or exit points. Here we're going to narrow in the time frame to give us an in-depth look at the current price action that we're seeing. Zooming into the hourly chart, April 23rd through the 24th, we see a sharp dip, which may have been a correlated sell-off from the announcement of the lawsuit. We can see a small rally followed by very little price action. The hourly chart isn't showing great signals, but let's take a look at the 15-minute to see if we can draw any insights there. Looking at the 15-minute chart, we see some tight consolidation periods, and we can make out clear support and resistance regions. A break above $22.80 could signal a short-term bullish trend, while a drop below $22 would suggest further downside, though these short timeframes are much more subject to volatility. Key price levels to watch are the support around $19 and the resistance at $25 on the daily chart. On the shorter time frame, such as the 15-minute, those values are $22 and $22.80. A break above $25 would increase the likelihood of a sustained bullish trend, especially if coupled with positive news about Intel's future prospects. The CPU sales will be very important in the coming months. A break below $19 may see Intel test its 52-week low of $17.67. Remember to stay informed about upcoming events such as investor conferences and continue monitoring analyst ratings and industry news. That concludes our analysis for today's episode of Explain the Charts. Thank you,